Ladies and gentlemen, welcome back to the channel. We have a ton of news to share with you on the government shutdown, the state of the economy, $2,000 stimulus checks, maybe tax credits, who knows. Bunch of comments from Besant, Moran, different Fed officials. Woo! This one's going to make your head spin a little bit, but we're going to break it all down, give you the news, and really try to internalize what's happening in this market. I know we've talked about it in prior videos, but what's happening? When is it going to end? What's going on? So, if you're confused, if you're watching your portfolio go down, it's another one of those shithole days. It's a shit sandwich kind of day. Again. But there's reason to believe that maybe this shit sandwich is coming to an end soon. Ladies and gentlemen, do me a quick favor before we get into all of this information. Hit that like button as well as subscribe to the channel. It's about the only thing that's free anymore these days. If you guys want to take it a step further, come trade with us. Come invest in some of these under the radar AI stocks. Check that link out down below in the description of today's episode. We made a video on the last purchase in the trading community. This stock is a $300 million company trading at less than 2 times sales that is growing at 400%, projecting to grow at thousands of percents next year. It's incredible the opportunities we are literally stumbling across in this market as Wall Street is panicking. We are executing. If you'd like to come join us, that link is down below. But let's get into all of your news today, which just doesn't seem to end. See, today, the stock market is not having a good day. It's another one of those days where risk on areas are plummeting. Look at UiPath. This is a company that recently announced a partnership with OpenAI, Snowflake, as well as I believe it was Google to integrate ChatGPT, Snowflake services into the UiPath, which is automation. This company has like 1.7 billion in ARR. It's trading at a $7 billion market cap. It's a well-known company that is emerging into AI in a big way. Stock's down 3% today. Resolve, another one that I own, down 4%. Poet, down 7%. CCCX, quantum company, down over 3.5%. Bitcoin, down about 2% today. It is very much another one of these risk-off days. Now, as I've talked about in prior videos, why is this happening? Well, it makes a lot of sense. Like, I can't deny that. It's because, look, 41 days ago, before the government shut down, people didn't think we were in a recession, but they didn't think things were great either. Fast forward 41 days later, flights are being canceled, food stamps are being cut off, and government workers are not being paid. It makes sense why people think we might be in a recession right now. It makes sense why these higher risk areas, these higher growth, smaller companies are selling off as much as they are. If you're a fund manager and your only objective is to beat the markets, try to beat the markets, although 80% of hedge funds do not, but that's what you're trying to do, and protect shareholder value, protect your investors, what you're going to do is you're going to sell the stocks that are going to go down the most during a recession. That's what is happening. The stocks that Wall Street thinks are going to be hurt the most during a recession are being sold. That makes a lot of logical sense if you think we're in a recession or pretty close to one. I can't argue with that. Now, I believe we are not in a recession, okay? I believe that people are probably a little bit too nervous. And I think, honestly, at this point, you've priced in any of the economic pain that we might be in right now, right? So what's going to happen is we're going to get the government that reopens, and you're likely going to see a positive reaction to even bad economic data because we've likely priced it in already. And number two, it's probably going to be better than feared. Okay, you don't need a 200,000 jobs report to get this market to go higher. You need a negative 20,000 jobs report to get this market to go higher. When the expectation was negative 60,000, well, it makes sense why these more recession vulnerable areas of this market are selling off. Which, if you look at the broader indexes today, you kind of see that the NASDAQ is down 0.5%, Russell 2000 down 0.04%, S&P 500 is down 0.01%, but look at the Dow is up 0.85%. People are saying, hey, if we have to be in anything, we're going to be in the staples, the value, if you will, okay? So you see that represented in the headline indexes as well, but even the headline indexes have not shown what has happened to this market. This market has been really crashing for about a month now, little over a month. Almost exactly when the government shutdown started is when small cap and AI stocks started to really go down. It's not a coincidence. Now the VIX today is up about 3% as, again, fears are rising. It's probably fears the government isn't going to reopen, that the vote is going to fail. Now, the vote is set to happen tonight. And if it passes, then I'm sure Trump will be able to sign the bill by this evening, and the government would be open tomorrow. Now, another big uncertainty we have is, again, does that vote pass or is it held up? Okay. If the vote is held up and the government does not reopen, we're not going to get the economic data we're supposed to get tomorrow. Tomorrow, we're going to be getting some bond auctions. I think some Fed speakers might be scrambled in here, like Fed Hammock right here. But core CPI month over month and year over year, we're supposed to get the October numbers tomorrow if the government is reopened. We're going to be getting all of your initial jobless claims, continuing jobless claims, and the jobless claims 4-week average. This will tell us a lot more about the state of the labor market, the trajectory of the labor market, and what's going on with inflation. Okay, which you have to imagine inflation is coming down. Inflation cannot survive in a weak economy. So there's a question mark whether we're going to get that economic data tomorrow or not, let alone what the numbers are going to look like. So you can see how there's quite a bit of uncertainty over the next, 24 to 48 hours. On Friday, assuming the government is open, we're going to have Fed speakers, Fed Schmidt, Fed Logan, Fed Bostic, but you're also going to get PPI month over month for September and October, retail sales for September and October, and core PPI month over month for September and October. Going to get business inventories for September and August, and some other, subcomponents of the retail sales category. But over the next 48 hours, assuming the government opens tonight, you're going to have a better understanding of how the consumer is doing, how the labor market is doing, and how inflation is doing. But does the government open tonight? We just don't know that at this point. And that's where, a lot of the volatility could be coming in, specifically today in the markets. Now, again, as I've said before in many other videos now, this is really a two-part process. Number one is opening the government. That is in and of itself bullish. But number two, how is the economy doing? Once we get clarity on how the economy is doing, and hopefully, in my opinion, it's better than feared, that's when you start to see the year-end rally kick in. As Wells Fargo said last night, they think we're going to have an everything rally into the end of this year. That has to be somewhat predicated on a stronger economy or stronger economic backdrop than Wall Street is currently forecasting. Now, I'll tell you, typically, when the bar is this low, it pays to be bullish. But not always. That's not a general, 100% probability that you should be bullish or that you're going to make money. But normally, for an example, if everyone's expecting CPI to skyrocket, normally it comes in lower than expected. Even if it still is a high number, typically it's going to come in a little bit lower than expected. Same is true right now. Everyone's bearish on the economy. It's probably going to come in not as bad as people think. That's my opinion. Now, we are going to have some earnings as well today and after hours with Cisco. Tomorrow, pre-market, Walt Disney, Bitfarms, JD.com, Billy Buy, PaySafe, Gambling.com, and Canadian Solar. And then tomorrow and after hours, Red Cat, Applied Materials, New, and Virgin Galactic. Scott Bessent today says, quote, train the U.S. workers, then go home. Then the U.S. workers fully take over. We haven't built ships, semiconductors for years in the U.S. Overseas partners come in, teach American workers. That's a home run. Yeah, that sounds too good to be true. But it seems like the administration is softening the stance on some H-1B visa type of work permitting in America. Ed Bostic says, I do not view a severe labor market downturn as the most likely near-term outcome. That sounds great. Honestly, with the markets this bearish, Fed Bostic says, I am not detecting ambiguous, I think I'm saying that right, signals of a serious cyclical labor market downturn. He says that real-time indicators signal job market in a curious state of balance, and Fed Bostic says firms surveyed expect to raise prices well into 2026 and by substantially more than 2%. Now, in the news today, the U.S. aims to start lifting flight cuts in a week once the government reopens. U.S. Treasury Secretary Bessent says, quote, we will keep monitoring investor demand for treasuries. Bessent says that stablecoins could grow tenfold by 2030 from $300 billion. Microsoft, in the news today, expands their data center build out with a super factory site, the company says. Bessent says that treasuries are more liquid and robust than ever. And then basically in the same sentence, he says that Treasury will adjust issuance for auctions gradually to avoid market disruption. So I don't know about that. Anthropic today says they will spend $50 billion on data centers in the U.S. Now, Fed Bostic will retire February 28, 2026 at the end of his current 5-year term, the Atlanta Fed says. So, yeah, we might be getting another more dovish Fed official by early 2026, which is likely going to raise the odds of further rate cuts. Now, Trump will host a private White House dinner with business leaders. President Trump will hold a private White House dinner at 7:30 p.m. Eastern Standard Time, I assume tonight, attended by finance and business leaders, including the CEOs of NASDAQ and JP Morgan Chase. The Wall Street Journal reports the White House is considering new rules on proxy advisors and index fund managers, a topic raised recently by CEOs like Elon Musk and Jamie Dimon. Fed Williams says today, quote, it will not be long before the U.S. Central Bank needs to expand holdings again. That is QE. That is buying assets. That helps to lower interest rates and things like the 10-year treasury yield, which is really what mortgages and auto loans and business loans, even credit cards and credit lines trade off of. Now, AMD stock today soared 10% on strong growth projections as the CEO, Lisa Su, calls AI spending, quote, the right gamble. She says, I don't think it's a big gamble, she said. I think it's the right gamble. She talks about how AI inference and their chips are insatiable, that there's no slowdown in sight for AI investments. She says that data centers are going to grow to be over $1 trillion industry by 2030. And there was some specific comments, specifically around AMD and how they're expecting $45 billion worth of sales soon to the data center industry. Keep in mind, AMD does like $6 billion a quarter, so that would be some pretty incredible growth there. But what it really just sticks out to me is AI is alive and well. That's it. That's the bottom line. Again, if you needed any more proof that AI is alive and well, you have it here with AMD. In the news today as well, White House senior advisor Hassett says the government shutdown will impact this quarter's GDP. And even like Hassett saying things like this is, again, like if we were to get a negative GDP report, it's not like it would be a surprise, right? Like the government is literally telling us that it's going to be a little bit worse. Now, Hassett says that GDP could be between 1.5 to 2% this quarter, which is much, much stronger than Wall Street would think at this point. Like, we are not pricing in 2% GDP growth. No, you're pricing in basically a recession at this point, or getting pretty close to that. Now, the Trump administration has said they back the bill to end the government shutdown, and Trump will sign it. Now, there was also substantial talks today about the $2,000 tariff checks that would go out to families making less than $100,000 per year. Scott Bessent said it might be in the form of some kind of tax credit or something. So we'll just have to wait and see. But I am watching this situation as well. White House senior advisor Hassett says GDP for this year will be about 2%. Hassett also says that supply side policies will allow growth without inflation. Now, for the markets today, the CNN Fear and Greed Index is coming in at 34. So you're still not even quite to the midpoint of fear. Okay, so this market is in pretty rough shape under the surface. Now, market momentum is greed, stock price strength, extreme fear, stock price breadth, extreme fear. See that there? Put and call options, extreme fear, market volatility is neutral, safe haven demand is greed, and junk bond demand currently in extreme fear. We will get a new AI investor sentiment survey coming out tomorrow. The last one we had showed 38% of investors were bullish, 25.8% were neutral, and 36.3% were bearish. I think we're going to get a big rise in the bears in this upcoming week's AI investor sentiment survey. There's almost no way around it, just with how much pain and carnage you've had in markets under the surface. Now, the Fed rate monitor tool is pricing in a 62.4% chance of a Fed rate cut December 10th and a 37.6% chance of a pause. Now, you are no longer pricing in another cut for January 26th. The odds of a pause sit at 51.3%, and the odds of another cut sit at 27.8%. But the odds of no rate cuts at all, either December or January, sits at about 21% as well. So that's why it's important to get this economic data that we should be getting tomorrow and Friday, as well as CPI. It's really going to move the odds of Fed rate cuts. Bassett says if he's asked to be the Fed chair, that he would do it. He says that if he was at the FOMC, he would be more likely to move to cut rates, while Powell is less likely. Fed Moran says Fed policy is too restrictive. White House senior advisor Hassett says that inflation momentum is pretty directional, which he's talking about directionally lower. Hassett says, I agree with Trump that rates can be a lot lower. Oh, and before we forget to mention this, we're also expecting to hear tariff rates come down substantially on items that we do not grow or produce in the US, like bananas and coffee and other related industries, as soon as tonight or tomorrow. So that could also be a positive catalyst for this market, although it's really all about the economy. Keep in mind, Trump lowered tariffs on China by 10% 2 or 3 weeks ago, and the markets, the NASDAQ was down 1.5% the next day later. Like, when you have recession fears, almost nothing else even matters in markets. And I think there's actually been quite a bit of good news from a policy perspective that has not gotten priced into this market yet, which could come around and be a part of the end of the year rally. So again, it's a shit show kind of a day, but really what it boils down to is economic concerns. There's zero certainty out there. As I said in the last video, Wall Street wants to be cradled like a baby, okay? And there is no cradling happening in this market. There are recession fears everywhere, and the fear is really extreme right now. I think even a lot of retail investors are at the or past the point of capitulation, okay? A lot of retail investors have already gotten margin called. A lot of the stocks that, you and I might invest in, their RSIs are below 30. Like, they are dramatically oversold. And I think when a market generally is this bearish, it's not going to take a whole lot to get things to reverse course and give you quite a large snapback to the upside. And that could be happening over the next couple of days if the government does, one, reopen, which is the first thing that needs to happen. And number two, if the economy shows that it's not as bad as feared, which is my baseline at this point, because the fear is just so large. It's like a CPI report. If everyone's expecting CPI to skyrocket month over month and everyone's negative on the CPI report, then odds are good it's going to come in lower than expected or meet expectations versus come in even higher than the already high, expectations. Kind of like where we are now with the broader economy. People are so bearish that the odds are good that the data comes in line with expectations, which at this point would probably be seen as positive, or come in better than expected, which is obviously a positive. So hopefully that makes sense. I know we're talking about complicated things, what Wall Street is pricing in and blah, blah, blah. But just to keep it simple, you're set up in a very favorable way if you're long this market over the next coming days and weeks. Just my opinion. Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, check that link out down below. This is a long journey that we just started with AI, robotics, and autonomy. There's going to be opportunities everywhere over the next decade. And if you guys want to execute, check that out, link down below. Have a great rest of your day, and I will see you in the next one.